Hello traders, Gary Wagner here. Approximately 1:30 in Honolulu, 7:30 in New York. It is Wednesday, Cinco de Mayo, May the 5th, 2021, and this is the daily report for gold and silver. We did have gold and silver trade fractionally higher, giving back much of the losses that occurred yesterday. That was due to comments made by Janet Yellen as she clarified a statement from yesterday and pretty much did a 180, saying that she does not expect the Federal Reserve to raise rates. That being said, we had a neutral dollar, we had higher gold and higher silver. We'll talk about that along with copper and talk about a historical high in palladium. Our show begins now. Yesterday, gold experienced a sharp drop, trading to a high of 1798.30, trading to a low of 1769.50, and closing just a few dollars above that price point. That was due to statements made by Treasury Secretary Janet Yellen, who said she believed that interest rates should definitely be higher to account for the massive amounts of national debt and to try to keep it in check. Today, she reversed her statements, and as such, we saw gold move up $10.60 at $1786.60. Traders, we are looking at a daily candlestick chart of gold. We did get a retraction or a clarification of Secretary Janet Yellen's statement yesterday. That statement caused a tremendous sell-off in gold. You can see that with this large red candle here. However, on both days, the low has remained identical at 1769. That is a harmonics between the 21-day exponential moving average as well as the 23.6% Fibonacci retracement. It did trade to a lower low today, and that to me tells me we are still mired in this narrow and defined range. My sense is that if they cannot take out these highs that occur roughly at 1800, which is absolutely major resistance, we will probably take a stab at making a new low. But this is all fundamentally based. And traders, we are looking at the market through the eyes of technical studies. My sense is if President Biden's new initiative to ramp up the infrastructure and not be able to fund that by just raising taxes, which the majority of people believe is not possible and the numbers really don't add up, then we could see gold take off. If we do that and we break above $2,000 per ounce, I think we could see a tremendous rise in the price of gold, but that is contingent upon whether or not Biden is able to move his proposal forward, and if that gets the country in further debt, it most certainly would affect the price of gold. For right now, we remain neutral with no active trades in gold. Those comments also resulted in silver selling off pretty sharply, opening above $27 per ounce and settling at $26.57. Today, silver did have a lower close when compared to yesterday, as current pricing on silver on the close of New York came in up under 1 cent and had a last print of $26.56.5. In terms of silver pricing, we do continue to have support at roughly $26.12. That is the 50% retracement level. We do have all four moving averages that we follow below current pricing. However, unlike gold, we are trading lower in Australia. You can see that by this small red candle here, and it is within the range in which silver opened and closed today. My sense is that unless we break above $27, I am not a real player because I believe we will continue to see this market trade sideways unless it breaks below $26.12 or above $27.12. Although we are not trading palladium because of the extreme volatility and very, very small liquidity in number of contracts traded, it must be noted that it hit an all-time record high on an intraday basis, breaching 3,000, trading to a high of $3,010. It is currently fixed at 29.75. Copper futures closed in essence unchanged, trading down by about a third of a cent. That decline is 0.08%. It is currently fixed at $4.52 per pound, roughly the same price point that we got in at. On today's video report, we will discuss our upside target where we believe copper could trade to over the next couple of months. We are looking at a daily copper chart, and we can definitely say a highest monthly close, and that occurred approximately 4 trading days ago. That would be this particular candle here that occurred on Monday of this week. This is Tuesday. This, of course, is today's trading activity, and the small line represents trading in Australia. We can say that the way that copper has been moving has been similar to when we see a rally in gold, and that is we get a price ascent, we get a small, modest retracement, and then we see the market move, retrace small, but the bias is absolutely to the upside. The all-time record high in terms of an intraday basis is $4.65, and I believe that the market could trade well over $5 per pound, and we'll show you the data that suggests that that is possible. And to illustrate where we think copper is going, we have to look at where it's been and the historical highs. You can see that this particular candle I've just put a red arrow to represents the highest point copper has ever traded to on a monthly basis, but that is an intra-month high. In terms of closes, you've got this close right here, which roughly matches this close right here, and they come in at approximately $4.49. We can see that we absolutely took that price out on a monthly basis as well as a weekly basis, and that tells me that the next real target has got to be $4.66 per pound. To do an analysis, we really have to go to Elliott wave. We are looking at copper with an Elliott wave count. The Elliott wave count is indicating that we are in a major third wave. That is right here. However, even though it shows the potential for a correction, this is showing waves 4 and waves 4 potential, when it does its forecast, it's looking for the third wave to move much higher. In fact, we have to compress this chart quite a bit, and when we do that, we come out with approximately $5.60. And what is so odd about that is over the last couple of days, I've been talking about Bank of America's commodity strategist predicting that copper over the next 2 months will go as high as $5.69. And it seems as though they are using the same technical studies and indicators that we use, meaning Elliott wave, because this number is fairly identical to the prediction or forecast by Bank of America. I am still extremely bullish, and the reason I am so bullish is it is a simple supply and demand play. If we truly only have 3.3 weeks of supply, if demand is outstripping supply, it has nowhere to go but up. A market doesn't correct when the demand far exceeds the supply. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.